Okay, okay, testing, 1, 2, 3, testing, 1, 2, 3. Wayne in Spain falls manly on the plains. Did I get the right stream? Is this the FX Street stream? Say something, I'm giving up on you. No? All right, hang on. Let's see what's happened. It's running. YouTube. Street. Guess I'll kill it if nobody's here. Oh, okay, should be up and running now. We'll just see. All right, so there is a bit of a lag. All right, good to see you, everyone. Good morning. Comment allez-vous? Good morning. Happy Friday. Happy second Friday of the month. Is it second Friday or is it the... Yeah, I think it is, isn't it? Hang on, I get an echo out of my acoustic guitar. All righty, how you doing? Comment allez-vous? So you know what? I'm not receiving the chat. Participating time. Is nobody chatting? Okay, I can see it over there, but for some reason over here, I'm not receiving chat. Refresh chat. Let's try that. I see you over there, but I don't see you over here. YouTube live dashboard, control your stream. Oh. So hang on, guys. Kind of have to see your chat. Huh. I don't see the chat. It's just not streaming. I see you over there. So hang on. Let me get back. Let me get back to YouTube. Oh, you know what? I have the link directly in here. Hang on. But I probably can't do it while I'm streaming. Hang on. Ended stream. Let me go to editor. Browser source. All right, hang on. I have to manually log into the chat. Okay, chat should be here. Paste. Enter. And that should work. All right. Kind of a slow start. Oh, there we go. Wonder why it's not pulling the chat. It's kind of weird. So, yes, can you confirm that you have sound and audio, video, all that kind of stuff? It's too late in the month to do that, Villa, but yeah, you can see it on my screen, but it's not coming up on my platform, my broadcasting platform. All right, so anyways, you got sound. Now I can hear, at least I can see stuff over here. Looks like you don't have charts. Let me get the charts up. And then my chat goes away. So hang on. Let me at least do this, and then we won't mess with it. So anyways, good morning. Happy second Friday of the month. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never, ever, ever risk money you cannot afford to lose. Welcome to Trade Non-Farm Payrolls Live. Woohoo! 155, baby. Nice, huh? 155. That's a long time. It's amazing since I'm only 26 years old. I've been doing this since I turned 13. It's pretty amazing. Half my life already. So thank you to FX Street for hosting us. Hang on, now I can't see the chat. I gotta resize everything, squeeze the chat in here. Where did the chat go? Hang on. I miss you, chat. There we go. It's over there. If I put it over there and I rechange the size of here. Good thing I have at least 2 screens on this machine. There we go. All right, so now I can see chat. That's pretty good. So anyways, hey, my name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. Namaste. Thank you so much for being a client of the TW. Oh, if you're new to me, if this is our first time hanging together, right on. I'm here to answer questions. I'm here to be a guide. We'll cover technical analysis, fundamental analysis, trader psychology, whatever you want. But I've been trading Forex for forever. I mean, absolutely forever and ever and ever. So very cool. So get involved, ask questions. But let me ask you something, or please be respectful to the other people in the chat. Please, you're basically in my office. You're in the FX Street offices. Let's treat everyone with respect. Everyone here wants the same thing. They're learning or trying to be successful as foreign currency traders. So, we're comrades in arms, so to speak. So treat everyone with respect. Cool. Anyway, so if you ask questions and you get involved in today's webinar, we only have 3 hours. We only have 3 hours. Okay. But if you get involved, we can cover a lot of ground. A lot of ground. Scalping, spot trading, swing trading, carry trading, the gamut. Okay, so it's really up to you. You're the boss. I am just a humble currency trader. Okay. Now, if you do learn from these webinars, or in this in particular today, and you say, hey man, this Wayne guy he's crazy, but he's helpful. If you find that to be true, or at least the helpful part, would you pay that back and visit TradersWay.com? Give us a shot to earn your loyalty and respect. Just start with the demo account. That's cool. When you log in, it takes maybe 30 seconds to create an account. Then it'll ask you, hey, do you want an ECN account? Do you want a fixed spread account? Do you want a variable spread account? It's your way at Traders Way, man. Set it up the way you want. Then you can download MT4. And if you want, I will give you my chart setup. I will give you my pivot points, the monthlies, the weeklies, the dailies. I'll give you the moving averages, the way I have them set them up. I'll even give you all my profiles. So there's dozens of profiles, each with its own chart setup and each chart with its own template. You can have that for free. Is that fair? Well, I know it's fair, but is it fair? Yeah. So anyways, that's cool. So thank you for being here, and let's have a wonderful day. Oh, hang on, now I got to find a way to switch. There we go. Oh, let's do it here. There we go. All right, so I'm going to leave it here because this is wicked awkward, this setup today, but it'll work. There we go. We'll leave it at that. That's our view for the next 3 hours. Let me get a drawing tool out. Yeah. Thank you, Alpha. Yeah, it's very fair. Of course it's fair. Yeah, cool. Yeah, I noticed there's a lot of things not pulling off of this stream properly. I wonder what it is. The chat, I'm not getting the chat. I'm not getting the viewer data. Very interesting. Must be on different servers or something. Sir, can you help me in the Forex markets? Okay. Okay. Okay, sing. Okay. Yeah, I guess so. That's why I'm here. All right, so technical analysis, fundamental analysis, all that kind of stuff. Very, 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 very cool. We'll cover all of that. We'll have tons of time. Now, in the beginning, I like to talk about, the power of planning. And planning is important because if you don't have a plan, what happens is you're trading by the seat of your pants. And you end up trading both ways, swinging both ways like a broken gate, or flipping, making decisions based on news, right? News, events, all of a sudden you're like, oh my God, look what the ECB did. Oh my God, did you see that ISM? And you're reacting, and you become a mess. And professional traders don't behave that way, right? Jan says, I called the Zara move 100% a few days ago. Right on, Jenny. Hey, send me a box of cigars. I like the Bay Hike 58s, the Cohiba Bay Hike 58s. Not the 54s, the 58s. Maduro or not, I'm indifferent. Okay, so anyways, planning is going to be the most important part, and we talk about this going into a big high volatility event. And it is non-farm payrolls is a fundamental event in the sense that if you look at the trend of non-farm payrolls over the last year or two, we know a lot. We know that the job market in the United States is strong, right? We know that wages have not been rising until just recently. So even though the unemployment rate is at 4%, and we even expect it to drop to 3.9 today, the most important thing we're actually looking at, because we already does it really matter whether it's 4 or 3.9? And really, are they really that smart in the government where they can go, that's about 3.9. Right? They're not that accurate. 4, 3.9, whatever. But what we are very, 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 very interested in, it's not the headline number. It's not whether unemployment is 3.9 or 4.0. It's really whether that inflation is creeping into wages. And last month, we had a red hot NFP number, right? You guys remember that? It was just crazy red hot. But the unemployment rate went up, not down. And that's showing like the people that have not been working for years and haven't even been looking for work are suddenly back in the game because because inflation is starting to creep in. And that's very interesting. It's really interesting because employers are hiring people probably that they don't want to hire. But they don't really have a choice. And then there's the person that hasn't been looking for work for 3, 4, 5, 6 years. They're like, you know what? I don't really want to work. I'm not really interested in working. I'm not really good at working. I don't like working. But that's a lot of money that they're offering, right? And so it entices that person into a job. And you get very mediocre people working in very mediocre jobs, but with high pay. And that's the beginning of inflation, right? That's the interesting part. And that's what the Fed's going to be watching. So if there's a big increase in average hourly earnings, and in particular, the creation of an upward trend, it's the upward trend that is likely to move the Fed into updating their monetary policy, which is a fancy way of saying that they're going to raise interest rates in June, right? And that's what the market cares about. If the data, the trend in data is fundamental analysis. The actual data that pops out, that's just a news event. News, it's just news, right? It's the trend, change in trend that leads to a possible change in monetary policy at the Fed that then will have a lasting impact on the currency markets. All right, so don't get caught up on, what was the number today, what numbers came out yesterday. It's more like, what are the trend in these numbers, and how does the central bank interpret the trend in the numbers, in particular a change in trend in the numbers, and what is their likely response to the trend. And once you get that together, whether it's the Fed, whether it's the ECB, whether it's the BOJ or the BOE, that's what fundamental analysis is, the analysis of economic news, if you will. Okay. So what we're looking at today is the headline number. What are they saying? $1.80. Well, I think it's going to be like one of these things where it's either going to be 155, since this is Non-Farm Payrolls Live 155. 155 months in a row, guys. It's either going to be like 155 or it's going to be like 233. I don't think $1.80 sounds right. Okay. Boss, if price is going up and there are two supply zones, take one at a time. Monsieur Boot. Well, see, Singh, what does that even mean? What do you mean good or bad for traders? You mean trending or non-trending? I mean, the market's great for traders all the time. You might not have the volume and volatility you want, but you can still make money. Median? Yeah, but what's the mean in the mode? Can we look at USD yen? Yes, I'm happy to do that. Singh says, now he says, how do you become profitable in the Forex market? Well, buy at support, sell at resistance, let your winners run. And try not to suck. That's also a good one. Most people, after they trade for, let's say, 2 or 3 years, and they're still not that consistent, much of it has to do with just laziness and the unwillingness or inability to create solid trade plans. It's not their understanding of technical or fundamental analysis that holds them back. They're just not willing to do the right work. They don't do the hard work. They want to do the fun work. So you know you're doing things right if most of the time as a trader you're waiting. You're waiting for the next setup. See, I'm always one day, 1 week, 1 month, 1 quarter ahead. So like whatever happens on this particular day, like I would have thought this yesterday, I think it today, I'll probably think it on Monday. What is happening in that day most of the time is almost irrelevant. I'm not planning for now, I'm planning for tomorrow. Like you should always be setting up the next trade. What's happening now is only interesting to a reactionary trader, right? So anyways, what we're going to do today, because we are facing a high volatility event driven strategy, is we need to identify key levels of support and resistance. And therefore we know kind of entries and exit levels. Okay. Observe, RCATs, I tend not to use daily pivots on non-farm payrolls because not only, it's an economic release, but it's the biggest one. So we know there's going to be typically, typically unique volatility around non-farm payrolls, especially if it comes out somewhat unexpected, right? So what happened yesterday should be irrelevant to what's happening today. You know what I mean? And yesterday can be a tough day because we know non-farm payrolls is coming up. So I know we had the ECB meeting yesterday, which is, again, unusual. But in a typical day, the Thursday before non-farm payrolls can be a very quiet day because no one wants to put new money in the market if we have NFP the next day. So you can get this really tight non-farm. So if that day is really tight, so let's do it this way. I'll switch it over to dailies. What am I doing? Man, brain fart today. There we go. No, there we go. So if we're looking at daily pivots, and typically, let's say typically you have more of a day like this, and this is more like non-farm payrolls, right? You see, because you have a really tight day, you lose volume and volatility before a big news event. the pivots tighten up. So the pivots went this way. Okay. And then the big news event happens. Like, how is this helpful that we're down here? Well, the volatility gave us, let's say, a bigger range than the average daily range. Right? That's one thing. But then we have a tighter market range because nothing happened here. So should I use daily pivot points post news? No, that's not what I would do. So yeah, weekly and monthly is the go-to in a high volatility event-driven strategy because we're not necessarily interested in entries. You should already be in your trade, my gosh. But we're more interested in exits. And that's what pivot points are really good for. So like, for example, that is an M3 short entry for bears for the month of March. And that predicts that we are going to fall here. I am not joking. That's what that means. Ha! Well, that already happened. Chihuahua? I don't know. Okay. Can you give WhatsApp number or anything for which I can contact you, sir? No, I don't. No, I don't provide signals. Gross. No, sorry, bro. I'm not giving you my phone number. If you need to reach me, you can email me at wayne@fxbootcamp.com. Rickaby says, do you think yesterday's ADP report could be an indication of a disappointing non-farm payrolls? No. So you'll hear that on TV a lot, that, you know, ADP came out one way, so therefore NFP is going to be some other way. Okay. So many years ago, a very beautiful man, Kurt Worley, who's also very smart and very beautiful and very tall, he did some analysis for me. I said, hey, Kurt, can you look at the correlation between ADP and non-farm payrolls? Because I heard on the news one predicts the other. And he went through many years, and there's absolutely no correlation. No positive correlation, no negative correlation. It's a shotgun scatter plot that's completely meaningless. So ADP is a payroll company that works for small and medium-sized businesses. Non-farm payrolls is the employment situation report and the establishment survey, which both do a sample, because you can't survey the entire United States. That's called a census. So you only do a sample, and then you do some sort of fuzzy logic with statistics, and it spits out a number. And you're going to get two different numbers, and then they use that to come up with a big number and all that kind of stuff, and they're two completely different things. So are they related? Well, they're related in the sense that they're trying to measure employment, but there's three different ways that they're trying to measure this ginormous number. And are they correlated? No. Yeah, DiCaprio will, yeah, I think a little Brad Pitt as well, a little Tom Cruise as well. It's somewhere in there, but the guy from Good Will Hunting. I think if, you know, something like that. But yeah, thank you. Thank you for noticing. Cool. So anyways, that's interesting. So this is called a monthly swing, guys. Okay. And this was set up. So I have a swing trading group. We meet Fridays. We couldn't meet today, so I'm going to meet with them Sunday afternoon. But we look at something like this and say, here's a quadruple top. This pink area is where bulls take profit and get out of the market. And this zone right here, on a weekly basis, this is a weekly take profit. This is a weekly sell zone, and this whole thing is a monthly sell zone. So let's kind of rehash it. Let me change the colors now. Let's do it this way. I'll do this in dark red. Okay. This area is where bulls are supposed to get out of the market. This area on a monthly basis now is where bears are supposed to get into the market. You see the overlap? And then on a weekly basis, this is where bears are supposed to short. Weekly, monthly for bears shorting, and then we spent the whole week of bulls getting out. Ha! And based on all this information, and of course we talked about it 2 Mondays ago, I guess it was. Anyways, right there. That's the target. Ha! Ho! Hoo! Ha! That! That! Holy smokes. Manish, how would I know that? It hasn't happened yet, Manish. Would you like me to guess? All right, let's take $10 million of your money, and I'll guess for you. I'll do my best. I'm pretty good at fundamentals and pretty good at technicals, but you want me to guess? There's only a 50% chance of losing money. Let's do it. Give me your money. I'll just totally gamble it. You lose 100%, but if you win, I want 30%. So your upside is 70%, your downside is 100. Or how about this, Manish? Because you know I'm being facetious. Cool. Well, first of all, like, in my humble opinion, in regards to the Euro USD, it's already happened. The trade's dead. Okay? Yeah, DJ Pence. Yeah, I try not to be arrogant, though, but I'm definitely a confident person. A lot of people misunderstand me at first, and they're like, this guy is an egotistical, psychopathic, prima donna a-hole. And I'm like, I'm not prima donna. Okay. So anyway, so what do we do now? And that is the big question on this one. We might have to use other pairs. But often if you hit this target early in the month, we end up heading back this way. Humbleness is by far my best quality. Thank you, Kyle. So maybe just self-deprivation. My wife said something the other day that self-defecation. And I'm like, what? She's like, you know, it's a good thing. And I'm like, do you mean? I couldn't help laughing. Honey, I don't believe it's self-defecation. Anyways, so that is on my mind. But you know what? This will go anyway it wants to. Don't take your typical technical analysis and say, oh, well, I have this Gartley, and this Gartley pattern says it must do this or it will do that. Dude, this is going to come out and anything could happen. Right? Anything could happen. You have to admit that. You don't know what non-farm payrolls are. Yes, we know what the trend is and all that kind of stuff. But like I said, this is as accurate as government work. Think of it that way, right? So we actually don't know what the headline number is going to be. So why would you be so concerned and such? The bigger concern is like what I'm trying to tell you is if you had set this up 2 weeks ago or a week ago, I guess it's only been, you'd be done by now. And you're like, oh, I wonder what non-farm payrolls is going to be. And it's not necessarily something that you'd throw money on now. Okay. However, the reason we start to identify support and resistance is, the first question will be if price action. Okay. If price action is going to take us down. That's a simple price action move. Okay? That might happen. That's why we need to pay attention to support and resistance levels. Okay? Now, the next thing is, would it go all the way up here? And if so, how do you get into that? Well, that's going to take more than a few minutes if that's going to be the case. Okay? So we'll need to see something more like up, down, and it's probably going to have to break and then back down. And it's going to take a while to work our way up. Okay? So let's kind of mark some of this stuff. I'd call this maybe a, let me move this in. Hello. I'm going to move this in as the first sell zone. I'm going to mark this as the second sell zone. And then the third one is up here. Okay, I hope you can see what I'm doing. Cool. And you have to then label this. So you should be able to do it here. If you are already a bear. If you are already a bear. Are you a bear? If you are a bear, these are trade plans. Plan A is a maybe. Plan B is a maybe. Plan C is a maybe. You notice? These are plans. And I say maybe because you don't just sell because of the touch, because it could go up here. So when we get into this, now notice this is a 4-hour chart, right? So if we get into this, you want to drop into a smaller time frame, and we'll try to do this together, maybe a 5-minute chart. And what we want to look at that, let's say this is that resistance line here. We want to look for something like, and then you sell. And now it looks like this. And we'll probably go to S2 and take a walk. Okay? If it doesn't do that, it's going to go to the next level, and you're going to look for the same thing, a reversal pattern. If it goes up here, you're going to look for the same thing, a reversal pattern. But this is likely to happen. This is probably going to happen. This is unlikely to happen today. Okay? Notice we already had our big sell-off. Okay? So what if you're a bull on this one? Well, then we need support. You guys following me? You need support, right? Why do you draw zones disregarding the pivot level shifts vertical? I'm just looking at price action, brother. I'm just looking at price action. We'll do pivots later, brother. This is price action. So if you don't know me, guys, the first thing I look at is price. Then the second thing I look at is market. Pivot points are not price related. Okay? So if I didn't have pivot points, this would still be a sell zone. This would still be a sell zone. This would still be a sell zone. Okay? So I'm not looking at pivots yet. I'm still stuck on price action. Okay? So for example, lower low, lower high, lower low. Is that reasonable? Wow, is this not coming through? You guys can't see it well? Huh. Well, okay, I'll clear it. Maybe there is a YouTube issue. Huh? What do I mean by market? Yeah, we'll get there. All right, we'll get there. By the way, if you happen to want to know how to trade Forex, I don't have time to hold your hand and teach you every day, right? I do a live webinar for Traders Way clients every day. That's an hour and a half. And it really pushes you in the right direction and shows you how to trade properly. And we talk a lot about trader psychology and fundamental analysis and technicals and stuff. But if you truly want to learn on, a deep level with intensity, I've created 30 or 40 hours of videos for you so that you can dive in and learn all these things. FXBootcamp.com. Okay. Okay. So how do we go back? Can you see the charts clearly now? Looked like a lot of people couldn't see for some reason. I'm not sure why. Someone even said change the pen. You know what? Maybe it's resolution too. I don't know what your resolution settings are on the video, but I'll change to blue. Okay, so we're looking at price and market. And a standard price action, for example, is this. The detail about the live webinar. Yes, you visit tradersway.com, open up a trade account. In your back office, there's a button that says live webinars. I start Monday through Friday, 7:30 in the morning, New York time. Sup, Sure Trade? Link in time. Tradersway.com. Thank you, J-Dub. Please learn the show. Are there more trolls, FX? Thank you. I barely am keeping up with the chat, so I'm doing my best. All right, so anyways, price action. That's what I'm looking at first, guys. What's the basis of price action? Support and resistance of price. So that's why I started there. So again, so maybe your resolution's lower than mine or something, but there's plan A, there's plan B, there's plan C, and this is all just based on price action alone. So we want to be ready for, let's say, this. Is that reasonable? Then you have to ask yourself, if we break through this level and you're still a bear, are there reasons? Does this say you have to be a bull? Well, right now we're in a lower low, lower high, lower low scenario. So this is a counter trend trade, and that's a difficult thing. Got to keep myself watch the chart. Anyways, that's a difficult thing, right? But if we get here, we don't know if we will, but if we do, okay, then, right, if then statement. If you are a bear, if, then, or is it then? Sorry, then, right? If we are here, if you're a bear, and I guess is what I wanted, and we are here, whatever price, what is that? I can't see that. Is that 112? Can't see that. What, 112? 113. And we get to 113, okay? Look for, then, look for reversal pattern on a, how about a 1 minute chart, 1 minute or 5 minute. And if you get that, if you're a bear and we're at 13, and then you see a reversal pattern on a 1 minute or a 5 minute, short. Okay. In this case, the target would be a 1,382 to 1.618. Okay. Well, I think the biggest thing here, guys, if this goes up, first of all, you can't have like an incredibly out of, you know, let's say if the headline number is way different from expected, okay? then the market's going to do whatever it's going to do. It's going to be volatile. It can do this. It can go both ways. It can go any way it wants. Okay. But if it comes out as expected, the biggest thing going on here is professional traders are out of the market. Okay. And you look at these green candles and you might be saying to yourself, that's people buying. It's not really people buying. Of course, some people are buying, but the market's not long. They're just not short anymore. So part of my reasoning is if they were short here, and here I'm pretty sure people are getting short because there's so many reasons to get short here that a lot of people got short. But I am absolutely 1000% certain now that they were shorting there because they got out at precisely within the actual pip. It's to the pip they took profit. So I know they were hardcore short here. There were lots of good reasons to do it, but it's really where they got out that absolutely tells me that these guys knew exactly what they were doing. And the thing is, they're not in the market anymore. So who's doing it now? What's going on here? This is just more people taking profit and some, small retail traders, counter trend trading, all that kind of stuff. But let me ask you, if the news isn't like freaky weird, if the news is like 200, 180, $1.75, whatever, if it's within trend, what do you think's going to happen? These guys shorted here. Did you know they shorted here too? So what do you think they're going to do again? I'm going to short here. Hell yeah. Boom. And the trend continues. Okay. I think that's very likely to happen. Okay. So be cognizant of that. How about this? Just based on price, I don't care. Let's say get rid of your opinion completely about whether this should go up or down. In a scenario of lower high, lower low, lower high, lower low, should you be buying? What would you advise an amateur? Hey, we just had a lower low, lower high, and a lower low. What would you advise an amateur? Would you advise them to buy it here? Probably not. The caveat is if you hit this target early in the month, very often we go all the way back here. Doesn't have to, of course. That's the one caveat. We hit our target beautifully, but early. Okay. Okay. Now someone here says if 90% of people are short, go long. Oh, that's such a boring, silly thing. Why wouldn't you just do fundamental analysis and trade with a trend the way that, let's say CFOs of multinational corporations trade or big institutional investors trade? All that kind of stuff. How silly. I can't imagine that being taken seriously if you were presenting that to an institutional investor. Hey, I got this idea. I'm just going to do the opposite of everybody. Good luck with that, man. All right. What do you do? The opposite. Okay. Good sales pitch, though. Yeah, okay, so Pedro says you don't think that the ECB has changed opinions. Yeah, very, very maybe. But really, what was surprising about the ECB event yesterday? Was it that they didn't raise interest rates? No. That they're not going to raise interest rates for a very long time? Was that a surprise? No. That they changed the RTLO? No. That wasn't. And there wasn't that many surprises. So I don't know if people said, oh, well, I used to be so bullish on the euro, but now I'm bearish. You know what I mean? Does that make sense?
Irish Central Bank Deputy Governor Donnery saying a key concern of ECB Governing Council was persistence of uncertainties relating to geopolitical factors and the threat of protectionism, and a no-deal Brexit impact to Ireland would be severe.
All right. Just a quick review.
Now inside 10 minutes now to the U.S. and Canadian labor market employment.
Okay, just a quick review of the high volatility event-driven strategy. Okay. Where should we do this? Euro, dollar, WTI. Where should we do this? Wow, look at these amazing, great moves. I guess I can kill gold. You know what? I don't want to kill gold. Let's just move to another setup here. We'll do it here. Okay. We are going to let the news go out. We've already identified key levels of support and resistance, and we will watch that. Con, that's silly. All right. So the news is going to come out. We don't know what. But let's just say the news comes out and the market responds this way on a 1-minute chart. You can also use a 5-minute chart. But either way, you can use a 1-minute chart to start with, but then trade off the 5-minute. Okay? So let's say the market reacts like that. All of a sudden, giant red candle. Cool. The number came out, whatever came out. Was it a big number? Was it a little number? Doesn't matter today. We can add it to our fundamental analysis, but as far as trading today, that don't matter none. So we say, oh, looks like the market reacted negatively. So we don't want to sell low, right? We want to sell high. So the idea now is we wait for some sort of retracement, right? Probably somewhere around here, probably a fib retracement between a 382 and a 618. And then we're going to look to continuation. So imagine what a continuation trade is. If the market was up in the first 1 or 2 or 3 minutes, then we look for a retracement and then a continuation. This will happen on both the 1-minute and probably the 5-minute. Which means you'll get like this for 2 minutes, and you get this for a minute, and then this. And then it'll probably do this, and then this. And that's just the fractal nature of the market. Okay? So what you're going to look at in the second move on the 5-minute chart is the move from here to here needs to then fib. So you're really looking at a Fibonacci of that, which would then make this like a 618 and then the drop. Okay. Does that make sense? Is that Euro USD? Well, it doesn't matter. I'm just showing you how to trade a high volatility event-driven strategy. It doesn't matter what it is. But yes, it's Euro dollar. Now, typically I use a template that has a watermark on it. I also tend to use weekly and monthly pivots. The weeklies are already dead to me. Monthlies are actually already dead to me as well because we've completed the pattern. Let me say it for the 5th time. The boring, easy trade for Euro USD bears has already taken place. The money's already made. They're already in the Caribbean with their mistresses floating around a boat, drinking champagne, going, I'm a Forex hedge fund manager. Look, 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 look. And this is for everybody else. So yes, we will do all the yen pairs, all the dollar pairs, gold and oil, and other crosses that you would like me to cover. I got to keep an eye. Okay, we're about 4 minutes away now. Okay, so we'll cover all that in time, guys. So let me once again thank FX Street for hosting me for this event for the 155th month. Do you even know someone that's been trading Forex for more than 155 months? I've been doing this webinar for 155 months. I think that's really cool. Okay, the retail industry is barely 155 months old. So anyways, thank you to FX Street for being here for me and providing the resources way back in the beginning when the days were dark and lonely and scary. Most of the services out there were scumbags and scam artists and, you know, Forex Made Easy selling you a MACD indicator for $5,000 and promising you to get rich. And then finally you run into FX Street and you're like, this is a place for me to be with other currency traders. So I was so happy. So thank you to FX Street for everything. If you need a trading account, please visit tradersway.com. If you need really intense foreign exchange trading education, please visit fxbootcamp.com. Teach you how to swing trade, teach you how to scalp, teach you fundamentals, teach you whatever, man. With that, let us get going. Let me move this around over here. Let me turn on tradethenews.com. Let me get off this though. Let me move this. Let's go back to the chart we drew. And remember, if you don't know what's going on, please don't trade today. Don't risk real money in the market. Okay? If you lose 50% of your account, you have to make 100% profit to get back to zero. Please don't lose money.
Another minute to the data. Non-Farm Payrolls for February expected to 180,000, 180,000. These provisions in the prior 304,000 as well. Employment expected to tick down 0.1% to 3.9%. Hourly earnings expected at 0.3%. Month-over-month 3.3% year-over-year.
So hopefully you remember the plan. I got a drop here. Remember, there was a 1 minute play first and then a 5 minute play.
February employment data in just a few seconds.
$1.55? Yeah?
Payrolls at 20,000 for payrolls, level 180,000 expected. Prior rise higher to 11,000. 4,000. Employment at 3.8%.
What?
Down from the prior 1/10 level expected.
What?
Hourly earnings at 0.4%, better than the 0.3% expected.
Did they even try? Come on.
Higher than expected as well. Back month price down 1/10 to 3.1%. Weekly hours at 34.
They're like, this is hard work, man. I just got back from the government shutdown. I can't do this kind of work. There's no way. There's no way that's true. That's funny. All right, NFP 20,000. Fed ain't going to raise interest rates in June. That's what the market's thinking. If you want to be a bull, fine, but not here, brother. You're at resistance. I drew all of this out for you before the news came out. Don't buy there. I just showed you that that's going to be a sell zone. But if you want to buy this now, wait for your pullback. I just showed you 5 or 6 minutes ago. Okay? You can pick up a drop here if that's what you want to do. The other way you can do it, like I said, is drop into a 5 minute, and you will have your chance probably in 20 minutes from now when the volatility calms down. But I'm telling you, if we go back to here, whoever sold here and took profit here, it's so perfect. I know these bears are alive and well, and they're hungry. So they're going to either here or here sell. So don't be so confident. And I can't. Does anyone believe that number? That's redonkulous. So anyways, be very careful. That's a huge sell zone, as I already pointed out. And look at that. Look at that. That's what happens to people that chase price. All right, so now what? Nothing's happened. Now what? Do you buy that? That's not my rule of engagement, so I don't buy it. But that's crazy, huh? Okay, what was the rules of engagement? Fibonacci retracement, maybe somewhere between the 382 down to the 618. 618, right? So like maybe it comes down, you can buy it there, or maybe it comes down, you can buy it here. Did I say, hey, let it drop 100% and then jump in? No. Rules of engagement have been breached. Stand down, soldier! Okay, so let this battle go on without you. Don't get involved. You can always wait now and let it do its thing on the 5-minute chart, remember? Remember I said it'll happen on a 1-minute chart and a 5-minute chart? So, okay, just back away from this one. Protect your money, guys. You're not supposed to get filthy, stinking rich trading non-farm payrolls. So if it doesn't bend to your will, if it doesn't do exactly what you tell it to do, then don't play. You're looking for unfair advantages as a currency trader. Okay? And I just explained how they're institutional traders. This was plan A for institutional bears, right? Remember that? They got what they wanted. So be careful. Canada net change in employment 56. Holy smokes. How's CAD doing? CAD's probably on fire. Oh yeah, look at this. I'm so glad I laughed at the number. Wow, somebody's losing money like crazy. Oh my God. Nice. La la la. Very nice. All right, so I want to look at the kitty cat though, because that's a hot number over there, and we were at a CAD low, so to speak. Check that out. Good job, Canada. Definitely support right here, however. Here's another swing. Another incredibly beautiful swing. Okay? Beautiful. So this is the monthly buy zone. Then we get a new week, and the new week starts here, which is the weekly buy zone. So this is a buy zone. This is a buy zone, but only if you're a bull, of course. If you're not a bull, you wouldn't look at that as buy zones. Your sell zones were here and here. But anyways, these are clear buy zones, and so if you put it together in here, the interesting thing is this was your target. So once again, you took your profit and you're out. Look at that. Good job on taking your profit. So now what? This is a dynamic level of support. Do not sell. Do not sell. Okay? Do not sell. Do not sell. Do not sell. If you want to sell, have a trade plan. How about something like that, my friend? Huh? That was a hot number, though. What was it? 56? 56. Yeah, 56K out of Canada. But practically 6% unemployment. That sounds terrible when the United States is at 4. But hey, better than France. What's France at 12? Well, this is like some sort of error, Forex Pipper, and I don't know if it has to do with the government shutdown or not, but there's no way that that's true. That number is so bogus. Absolutely no way, in my humble opinion. No way that that's true. But funny stuff anyways. Happy fun times. Housing, 1.23, that's fine. Permits, 1.35, that's pretty good. So as an analyst, as a personal economist, if you want to look at it that way, one of the things I look at is like how many buildings are being built. So let's call this above average or above expectations. And then you look at rents and you look at vacancies or occupancy rate. And you look at those three statistics and it'll tell you when the crash is coming. And in particular, what I look at is an increase in building permits, stagnation in occupancy, okay? Rents are still going up, but that stagnation in vacancy levels, or sorry, occupancy levels, and then eventually, of course, then you're going to have a rise in vacancies. Rents are still going to go up, but within 2 or 3 years, probably more like 2 years, because of this number right here, 2 years after the vacancy move, the entire stock market, the entire housing market, everything's coming down. Full-on recession in the entire economy. So those are some of the numbers I look at. That's my alpha, baby. Con, you need to take a fundamentals course. You need to understand central banking and monetary policy. It's absolutely critical you learn such things, Con. So I invite you to go to fxbootcamp.com and take the fundamentals course. Does anyone want a discount to FX Bootcamp training courses? Like a significant one? And would you like my chart templates? And would you like my pivot points? We'll go through gold and oil. Anthony, come on, dude. I don't like fundamentals. Don't even say it, Anthony. Gee whiz. It makes my skin crawl. Ooh. It's just, no, just don't say it, Anthony. Just don't say it.
In-house trade official saying that trade talks with the EU are progressing well.
Okay. All right, cool. I can't post the link, but moderator, could you post a link? Charts.fxbootcamp.com. Jimbo, I think it's just a mistake. I don't think it's the government. Like, well, first of all, Trump wouldn't want that. Okay. Let's see if I can do it. I don't think I can do it. Thank you. Thank you, moderator. Appreciate that. So down there is all my chart templates, and you will be given a coupon code for a big discount at FX Bootcamp, so you can get the courses like the fundamentals included. Okay. I do tons of that, Kai. Tons and tons. There's probably 100 hours of the live trading setups. All right. La, 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 la. So let's look around the world. Let's start with the yens. And then we'll do dollars. And then we'll do gold and oil. Yeah, let's do it that way. All right. So yens. Okay. If you want T-Noble, that's funny. Click the link above you. I've never met Sammy. He never went on the, I never saw him at any of the training, what do you call them, like Traders Expos and stuff. So I don't go on the conferences and stuff anymore. I used to spend a couple $100,000 on going to shows and stuff. I don't do it anymore. I have young kids now, so I don't travel as much as I used to. Yeah, thank you, Pedro. All right, cool. So let's start with here. Now this one started the week exactly where bears wanted it. Oh, let's go back. I don't know how many of my regular viewers are here, but can anyone here confirm that I spent weeks and weeks and weeks preparing you for yen strength in March?
Indicating he's accepted an invitation to visit China.
How many people can confirm that I spent weeks and weeks and weeks, even months, preparing you for Japanese yen strength in the month of March? How many people can confirm? I'll have to wait. There's a bit of a lag. And my regular folks are probably not here, but anyways. So Henley, Nazabu, yes, yes. Agree, yep. Imad, yes. Jim, yes. Al, yes. Yeah, yes. Ron, yes. Guy, yes. Hassan, yes. Michael, I concur, yep, yep. Awesome, guys. Weeks and months preparing you for yen strength. Like that. Cool. See? All you have to do is be a client at tradersway.com. How easy is that? Peter says here. Yeah, well, often this time. Yeah, that's cool. All right, look at that, everybody. Woo! Hey, Kenny, I'm still trying to get to Hong Kong. Are you going to be in Hong Kong? Who else was going to meet me? There was 2 or 3 people. Chang was going to meet me out there too. Joe, right? But anyways, we should probably, I'm trying to get there. So anyways, cool. So imagine now you had a crystal ball and you said that even though the yens are weakening here, that somewhere around here it was going to reverse. No, not the 3rd week of January stuff. The 1st week of March. Okay. Okay, cool. Lots of people still confirming. Right on. Yes, that's right. 3rd week of January is the false rally, right? I'm trying to, I don't know. I might find out today. I might find out Monday if I can get my deal to come through. But anyways, we'll see. Imagine you had a crystal ball that said, get ready. This ain't funny. My name's Mike D and I'm about to make money, right? So what are you doing here? Well, first of all, here's the interesting thing. This is the monthly sell zone. So the first part of this is, if it was, so you're thinking 3 weeks ago or something, that March might be down. So when you're at the end of February, like this period, you want to look at your pivots on a monthly basis and say, well, if I wanted to be a bear on this pair for the entire month of March, what is the sell zone that I would find most attractive for that to happen? The answer to that is, right, is actually here. Okay, not perfect. No, I do daily webinars, T Noble. Yes, thank you, Forex Pipper. That's right. 3rd week is false rally for the stock market. 1st week of March, stock market comes down. Right? All right. Anyways. So we have that. That's the first part of the thought process. Remember, this is hypotheses. It's called a strategy. You don't know if it's going to happen. It's just a hypothesis. So now you use technical analysis to confirm or deny your hypotheses. It's scientific methodology, right? So that's not perfect, but check it out. The last day of the month was pretty perfect. You would have been very interested in that, okay? So now let's get into this period. So like we'll zoom in now, not just this whole period, but now we're kind of just in this blue circle that I just kind of squiggly lined. What are you thinking now? So you look at the high, the low, the close, you know, all that kind of stuff, and you start doing your calculations on weekly pivot points, and you say, well, I'm a bear for March. We're basically, because at this point we were still in the sell zone. So you're like, so I'm in my monthly sell zone. So right now you're pretty happy, but you don't have the price action yet, but you're in the right price. You basically have the price you were hoping for, but the market is still bullish. It hasn't turned bearish. You just think somewhere around here, sometime soon, it's going to fall. So now you do your calculations and say, well, I wonder what's going to happen the first week. And you do your calculations, and your calculations tell you that somewhere between this number and this number, okay, it's going to turn bearish. So now the only question is, where in here do you confirm or deny your hypotheses that you had for weeks? That somewhere in this time frame, somewhere near this red price, and then as far as your actual first day entry, somewhere in this price, when does it actually go? When do you actually pull the trigger? And I think for most people, it's like lower low, lower high, sell. Lower low, lower high, sell. And then gone on the ECB news. Ish kaput ya! Done. T-Noble. Visit tradersway.com. Open account at Traders Way. Could be a demo, that's fine. In your back office, there's a button that says webinars. You click that. It's 7:30 in the morning on Monday, and I will be there for you. I'll be there for you. All right, cool. You got it? That's called trade planning, guys. Weeks in advance, 3 points, nothing but net. Cool. What do you want to do here on the beast? How pretty. So what's the first part? Well, the first part you have to ask yourself is, thank you, J-Dub. Okay. The first question I always ask is like, where are we going? Where's the market going? What's the target? Okay. The answer to that on a weekly basis is this. This is a weekly M3. That predicts weekly M1. Okay, cool. So that's where we're going according to pivot points, a leading indicator. So now I have to try to find out where that M1 is. So let me give it a click or two. Nope, too much. Okay, so let's go back. So all along this move here, the assumption was somewhere around this day, this pair was going to come down. By the way, this is beast. Great British Pound, yen. Okay. So the hypothesis is somewhere around here, this was going to fall. So we get here on the first day, and we have a weekly M3, which is a sell pivot. Oh, sorry, weekly M3, which is a sell pivot. And the target is this bluish area. That's the target for the week, if this holds. Huh! That's cool. Right? What else can we learn from this? You ready for this? Wait for it. This line is the monthly M3. It also predicts a monthly M1, which is this level down here. So we have weekly M3 that is saying down to here. We have monthly M3 that says down to here. We have fundamental analysis that says somewhere around here, this bullish market should turn bearish, or has turned bearish in the past, or has fundamental reasons why it should turn bearish in the past. Hey, and it fell! Huh. Cool. That's nice, right? No, yeah, I put the wrong one in there by mistake. I grabbed the wrong one out of my folder. It's not the OCO, it's the auto stop. I believe it's up there now, though. UK Kenny can read Chinese. Hey, maybe you should come to my board meeting. Anyways. Cool, right? Does anyone know what this is that I'm talking about? Does anyone want to know what it is? Like what type of trading it is? This is swing trading. Now, of course, the swing was based on fundamental analysis and seasonality. But the setup, the tactics, that's all swing trading. A combination of weekly and monthly swings. Now we haven't, on this pair, we haven't hit the weekly target yet, nor have we hit the monthly, so there's some juice left on this. But we also have to be cognizant of where the support is. So for example, this blue area is actually very supportive to bulls. And we face the real risk of this heading back up, okay, in this zone. So I wouldn't get too confident, but it's definitely a setup. Elliot Wave and harmonics, yeah. It's funny, Crypt Keeper, you know, those things are just not my personality type, but, you know, inevitably what you and I are doing is probably very similar. You look at support and resistance, and when you're at support or resistance, you essentially look for reversal patterns. How you do that, what tools you do that with, doesn't matter. Really doesn't matter, right? What is the monthly target? I can't read that. $1.40, $1.41. It's like 141 down to, if you're an aggressive bear, 139 and some change. It's actually lower, but it's so far away right now. Looks like almost 138. Yeah. There it is. I can't see that. What is it? Yeah, basically 138. Looks like it's 138.30 or something. I can't even read it. It's right. 138.40 is the most aggressive target. More conservative one is 140.75. Okay. Is anybody enjoying this webinar? That was beast. That was pound yen. Henley. Thank you, Henley. Yeah. Baby doll. That baby doll. Baby doll, baby doll, baby doll. Right on. Cool. Well, thank you. Yeah, I'm funny. Yeah, that's what my mom says. Every day of the week. Right on, Rizan. Oh, yeah. So this one, again, some of these don't put the... so this is naked for a reason, but let me put the watermark on. Someone was heckling me the other day. I have too many lines on my chart. That's unnecessary. You don't have to have so many lines. You don't know how to trade because you have too many lines in your chart. You don't need the... All you use... Oh, that's what he was saying too. All you use is lagging indicators. You don't know how to trade. You don't need lagging indicators. I've been trading for... Remember this guy? I've been trading for 12 years without lagging indicators. You don't know how to trade. Jesus Christ. Anyway, so that's how we got to that other chart. People are funny. YouTube's funny. Such a lonely world, right? So anyway, so I was trying to do this. But it's so foreign, right? I know. Yeah, but it's still funny. Thank you, TJ, though. But it's interesting. All right, cool. And I think I'm nice most of the time, right? I think most of the time I'm nice. All right. Cool. So anyways, Aussie yen. So for weeks and weeks and weeks and weeks, confirmed by 2 or 3 dozen people, we assumed that somewhere in here this was going to go down. Oh, cool. On a weekly basis, what price did you want to sell it at? This price. Oh, well, that's good. And then on a monthly basis, what was our sell zone? Oh, on a monthly basis, this was our sell zone. Oh, good. Huh. Right? Yeah, well, yeah, I can be grumpy. I'm a human being, right? So anyways. So, but that is like, these are things we plan for and plan for and plan for. Do you also remember, and this is going to be hard now, people are not going to want to answer this, but in this period, we talked about what are you going to do if you have a crystal ball and you still don't make the trade? Ha! That's a much more difficult question. So you're going to have to meditate on that. You know what meditation means? Meditation comes from an ancient word that describes how cows chew grass. Did you know that? Sort of like maceration. Okay? And it has to do with cows having 4 stomachs, and they would chew on grass, swallow it, spit it up, chew on grass, swallow it, spit it up, chew on grass, swallow it, and they do it at least 4 times. And imagine that same word being for your thoughts, right? And I ask you to do this a lot where I say, look, think about it. Like, what happens if someone sets up trades for you where I keep telling you it's coming, it's coming, it's coming and coming, and then you don't get it? Like, so all that tells me is like, it's not that like you're dumb or something. It's more like it's something else. You might have been telling yourself for years, like, oh, if I only knew technical analysis better, I'd be a better trader. If I only knew fundamental analysis, I'd be a better trader. Or if someone just gave me the signals, if someone just told me what to do, or if I just had a crystal ball that said these yen pairs are coming down in the first week of March, and it even tells me why, then I would be a better trader. But what if you're not? So the meditation part, I think, is very important. Okay? Now, another derivative, I think, is Greek, which is muse. Muse is sort of like inspired, right? What's the opposite of muse? If it's not inspiration. Does anybody know? The opposite, as far as the language, and I think it comes back from the Greeks. I think it's from the Greeks now that we're talking about, ancient Greece. What's the opposite of inspiration through a muse? You have to take the alpha, A, and put it in front of muse. Amusement, amuse, entertainment. Right? You sit there and you don't think. It's the thinking, the meditation, which is, yeah, it's not ignorance, it's amusement. So I tell you this often, and I'm trying to kind of share it with you, where when you take the time to think, whether it's about things like, okay, if I had a crystal ball and I don't take the shot, what is it that's holding me back? If you can answer that and you chew on that thought, chew it and bring it back and chew on it some more and bring it back and chew on it some more. It's that mental, intellectual process that will make you better. This is not going to make you emotionally better. I mean, it'll make you a little bit emotionally stronger because you've kind of gone through it, but you need to do that. Now, how about on a daily basis? So I do meditate every day, and I have for probably 20-something years. But I'm not classically trained, so I always talk about how I focus. I don't let go like I think a lot of meditation is. Like, just let go and float through the golden triangle. You're a flower in the... Like, come on, right? So I go hyper-focus. And so, for example, I think about the trades I'm going to do today because I set them up yesterday. You understand the difference? I think about what I set up yesterday, and I'm going to take them today. And I think in my mind about how strong I am as a trader and what I'm looking for. Like, what was the resistance level? What are the patterns I like most? What pivot point do I want it to be on? And I'm preparing for the game. If the market moves up, right? You know, like I'm running through my plays. And I'm rehearsing in my mind with intense thought. Meanwhile, I drink energy drinks. And I wake up from my meditation and I am going to kick some ass because I am ready. When I get in the ring, I am going to win. There's an old story about an interview with Mike Tyson. And Mike Tyson was so emotional. He'd be in the locker room and they're taping up his hands, and his hands would be shaking, and he's near vomiting. He's near tears. He's so upset about what's coming up. There's so many emotions. He's an emotional dude, right? And then he said, finally they get the gloves on, he'd feel better, a little more comfortable, but he's nervous, he said. But then as he walked closer, like then they'd open the dressing room door, and they're walking down the hallway, and all of a sudden they go into the crowd and 50,000 people get on their feet and they're playing his music. And he said by the time he got to the ring, he was going to absolutely destroy and murder the opponent. And And he said he'd get in the ring and he'd look the guy in the eyes, and there'd be a split second where the guy would turn his eyes away. He's like, he knew he was going to win. And he went from not confident at all to the point of tears and vomiting to absolute supreme confidence, right? And I try to do that every single day like a fighter going into the ring. I'm warmed up, I'm prepared mentally and physically, and I am going to win. And that's what meditation does for me, because not only do I think about these bigger things like, what's coming up next week, what's coming up next month, what's the seasonality telling me, what is the market telling me, where are we in this cycle, what's next year going to be like versus this year, all these different things. But there's also on the daily basis where I think for about a half an hour about my trades, and I don't even have a laptop in front of me because I meditate sitting down in the shower. I know, right? So I have a mental picture of exactly what I'm going to do before I do it, and then I do it. And then there's the other people that just show up and look for a trade. I'm going to destroy that person. Destroy them. It's not even fair. But I'm a killer. I love it. Okay? Planning, guys. Planning of preparation. And truly put time aside to think. And you'll be surprised how you get to the next level. It's not the technical analysis holding you back. It's not the fundamental analysis that's holding you back. If you had a crystal ball and you still can't make money, then it might be you. And it's fixable. Is that right, Joe? I didn't know that about Tupac. Hey, Con, we should meditate in the shower together. Wait, that doesn't work. But anyways, yeah. I used to meditate in the shower back when I was in California, because what would happen is I would lose time when I meditated. Like sometimes I'd just be gone for an hour and a half or something. I'm just gone. I lose time. To me, it seemed like 3 or 4 or 5 minutes, and like it was 2 hours. So I meditate in the shower, and in my house in California, I had one bathroom, and the cold water, we'd run out of hot water, and all of a sudden the cold water would drip over my neck, and it would wake me up. I'm like, oh, and it would be about 20 minutes. Luckily, I have 6 bathrooms now, right? And I have a Rinnai commercial grade endless water heater, so I can have people showering in every bathroom for 3 hours and never run out of hot water. So sometimes I do lose myself. I'm like, oh shit. I've had it like my wife's like, we're leaving in 5 minutes. I'm like, baby, I got to shower. She's like, don't shower. You're going to be up there for an hour. No, baby, no. I'm just going to take a quick shower, throw some clothes on. I'll be ready 5, maybe 10 minutes tops. Don't worry about it. But I'm so trained now, like a monkey. I'll get in the shower, boom. 45 minutes goes by, bang, bang, bang on the door. Like, oh, shoot. Yeah. I'll fall into meditation. So anyways, but you'll find, though, like Forex, when you do stuff like that, Forex made me a better golfer, for example. Where I have friends that golf all the time, and I watch them putt. And they're like, they look this way, and they look that way, and then they walk to the hole, and then they look the other way, and then they go back, and then they're like, and they're spending all this time, and then they miss by like 4 feet. I'm like, dude, seriously? Right? And I can goof around, I can look around, I'm like, oh, the birds are nice. I'm like, I should get out more. I don't really golf enough. This is really nice. And they're like, Wayne, you're up. I'm like, oh, really? And I walk around, boom. I'm so laser focused. In about 1 second, I'm like, boom, boop. I can get it close from 4 feet. And it's interesting because you train your mind. So I'm constantly looking for things, guys. Constantly looking for things that I've already seen. I would have meditated on this, and this would have been, right? Now, at this point, do I know it's going to go down? No. So you have to you have to understand that there's still risk management involved. And, because look at the trend here. So do I know for a fact this is going up? No, but I studied things like seasonality and fundamentals. Let me ask you something. Does anyone know why I assumed Japanese yen was going to get strong in March? 2 weeks ago, 3 weeks ago, 6 weeks ago, 9 weeks ago, 12 weeks ago, 16 weeks ago? Why were we talking about Japanese yen strength here? 16 weeks ago? Oops. What have I taught some of you guys? I don't keep the secrets for myself. Why did I have a trade plan from this going from up to down 16 weeks ago? 22 weeks ago? What's the secret sauce? Why repatriation? The end of the fiscal business year in Japan. You're welcome. For all those that answered Japanese repatriation because of the end of the fiscal year in Japan, congratulations, you're knowledgeable. Imagine half the people here didn't know that, and yet they're trying to trade against you. Boy, wouldn't it have been nice to know that? Once again, I invite you to visit tradersway.com, open an account. Monday morning, click on the button that says Live Webinars. You can hang with me from Monday and Tuesday and Wednesday and Thursday and Friday and then Monday and then Tuesday and Wednesday, Thursday, Friday, and then Monday, Tuesday, Wednesday, Thursday, Friday. So we can get together and I can teach you what I know. I'm a lone wolf, I think, right, Daniel? Cool. Kiwi. Oh, cool. Go through that. How do you swing trade? Here's the monthly price you were interested in last week. On Friday of last week, this was the price you were interested in. Both are sells. Oh, look, it fell. Here's your target. If you sold here on Monday, your target was the green zone. Nice trade, y'all. Absolutely, Jimbo. But that's true of like any kind of strategy you have, right? So that you have to always start with, I mean, really, you always have to start with this, like, what does the market tell me, right, Jimbo? That is the thing. Are you wrong? And that's why that's why I say it's not my opinion. It's not my call. I'm not making a call on the market. I have a hypothesis backed by research. And I have to use technical analysis to confirm or deny the hypotheses. That's the best I can do, scientific methodology, right? And 159 months ago, 160 months ago. You know what I did during non-farm payrolls? I golfed with my father. Actually miss it now. Golfed with my father. Every first Friday. I was done. I'd run to the golf tee. My dad's already there. They're getting ready to tee off. And he's like, oh, hey, son, good to have you here. Give me a hug. How are the markets? Talk Forex. Boom. Hit the ball and off we go. Okay. Yeah, that's true. That's fine, Jimbo, right? That's fine. Well, that's always going to happen, Jimbo. That's not me. That's not my fault. I don't tell them to do it. I don't make them do it. They're not listening to the rules. Someone's got to be on the other side of my trade. So if people are lazy and don't want to do the work and don't want to do the setups, they don't want to do trade plans, they don't want to do the education, they just want to trade signal, and they're going to jump in and chase price. Good. Everybody that is willing to do the work, willing to do the research, willing to develop patience and discipline needs people like that. It feeds their children. Right? If you're a wolf, you need a sick deer, right? You need an old elk. It's not your fault that you're taking down the old elk. It's just nature. It's just nature. Not here to change nature. But if you're willing to do the blood, sweat, and tears, put in the work and show the discipline, man, oh man, the world is your oyster. Cool. So let's get off yens. Let's go do some dollar pairs. Okay. Stock market's going to open, what is that, 12 minutes, 11 and a half minutes? Okay. So let's go back into this one because we talked about it right after the news. Remember? It just fell like a bajillion pips. Do you remember? I'm like, do not sell it. Do not sell it. Do not sell it here. Do not sell it here. We're at support. Do not sell it here. Cool. But do you guys remember what you could do on the 5-minute chart? You guys remember? What are the rules of engagement on a 5-minute chart? Yeah, Guy, well, that's the thing. So isn't it helpful to know what you should be working on? Find out what you don't. And then let's drop into a 5-minute. Okay. Okay. Yes, being open-minded. Also, Jimbo, to carry that theme a little further is seeing reality, right? Because we all have it. It's not like we can have it. We all have confirmation bias, right? And because we all have confirmation bias, we're going to see what we want to see. It's our filter. That's why having a bias is so important. At least you know what your filter is. What if you didn't know you wanted to be a bull or a bear and your filter is very inconsistent? At least you know you're a bear, right? So the rules of engagement that we had was post-news, trade in the direction that the news took us. Eventually on a 1-minute chart, it's going to hit support. And then it's going to do the same thing that it did before, right? It's going to, on a 1-minute chart, it's going to drop and it's going to come back to the 382 or 618 Fibonacci retracement. Then it's going to make a lower low. And then on a 5-minute chart, it's going to do the same thing. It's going to do, now from here to here, it's going to do a 382 to 618. And then make an extension to the 1382 to 1618, right? Do you guys remember that? So now we're repeating, or we're trying to repeat that trade or conduct that trade plan here. And we'll see. Make a sense? me get my trade the news going again. Did I kill it? I must have killed it. I killed it. Isn't it a little late? It's less ideal faux show, and you're going to end up getting caught in a fib war. But I'm more like reinforcing that it was there, right? That you could be short here if you were, again, watching the trade, setting up the trade, get, all that kind of stuff. It's not for me to put people into the trade, as you know. So if you did it, there were two levels that were most interesting based on price action. And I did this on euro dollar, right? Here's the first level of price action. Here's the second level. So, boom. Okay. Thank you, Daniel. Does it work for other pairs? So we did a whole bunch of yen pairs. That USD CAD pair went up to the pivot profit zone and got out. Here's the swing trade for USD Swiss franc. Here's the entry we talked about on Friday. Here's the actual entry on Sunday. And here's the target. Yeah. So that's what we talked about last Friday in the swing trading group. And there's the target. Cool. Done. Done. Take the swing trading course if this is interesting to you. Join my swing trading group if this is interesting to you. They're both one and the same. You can take the course and be in the group, right? So anyways, let's take a look at gold and oil. Let's go back to that setup. And to you, K-Star. Oh, thank you, Sure Trade. Well, the best thing about me, Sure Trade, is not only am I wicked smart and super good looking, I'm also very humble. I've even taught my daughter to say that. It's funny. My daughter's young, right? She's 11, 12, something like that. So I say to her, like, hey, when you're in a job interview, someone's going to ask you, give you, what are 3 of your weaknesses? And say, well, I'm an overachiever. I'm a workaholic. She's 11 and knows all that. So it's just funny. Oh, Lou, how do you think? You go to fxbootcamp.com. You insert a credit card, knowledge comes up. No money, no knowledge. You got to pay if you want to play. But other than that, it's only money. All right. All right. Let's do gold and oil. So we did this. Let's go through our trade plan here. Our trade plan at this point. So let's not talk about the swing trade. Now, the swing trade is here and here. That's fine. But let's just talk about not last week. What did we talk about? I don't know, 1 or 2 or 3 days ago, or 1 day ago, 2 days ago, and 3 days ago? That because of where we were and the velocity in which we dropped to this price, which is the expected price, that there's likely a high probability of a retracement back to this level and a reasonable probability, whatever that means. So let's say a 70% probability, and I'd still say 55% probability of heading back to this level. Okay, way different setup than those currency pairs, right? So all the yen pairs came down and the dollar pairs did what they were supposed to do, and all that's really good. But gold is different, right? And this is a much bigger thing. So yesterday, the day before that, and the day before that, we were talking about eventually it will almost for sure come here, but probably go as high as here. And there's lots of different setups for this. This is a bearish target on a monthly basis, but that also, because of the velocity in which we hit the target, sets up a reasonable likelihood of a counter trend, which means eventually a bull is going to buy this. So in here, this might be mostly bears, but it could easily turn into mostly bulls. I'm hilarious and good. That's good. I used to be a little sarcastic. Yeah, I'm not gonna create new trade plans till Sunday. So I need NFP to work its way through the system, like poop through a goose. And then I guess Sunday afternoon is I'm going to meet with the swing trading group. So if you're in my swing trading group, guys, because today's Friday, I don't want to do it today, and I need this poop through the goose. So we're going to meet Sunday at 5 p.m. and we're going to look for our trades, probably 250 pip swings. So I want to look at oil now because oil is very interesting, right? So we've been avoiding oil actually the last few weeks, even though generally speaking, on a macro view, I'm still bullish on oil. You know what though? I can't wait until we start trading water futures. You guys see that as a possibility? That in some point in our lifetime, we will be trading water futures, clean drinking water futures. I think energy is going to get cheaper and cheaper and cheaper and cheaper. And then one day, and we were talking about this, when energy becomes free, we probably won't even need money. But there'll be a point in time where energy will be free. I mean, look, we get it from the sun, for crying out loud, right? I mean, energy should be free. So eventually oil will go to zero. We might just run out of it. And that's what creates the next step, chaos. But generally, I think this will go down. But how about clean drinking water? Yeah, I think that's going to be very interesting, right? Yeah, well, I guess I'm not looking forward to it, but it'll be interesting. But anyways, how about this week or next week, right? Well, I can tell you we're at support. Okay, I can tell you we're moving sideways. So under current market conditions, okay, I would expect a little bit of up next week. Okay, for me to expect a low next week or even the week after, let's say, for a change in trend, if you will, I would need something like this. Okay, would be the follow-on. So it would be down next week, then sort of up, and then down 2 weeks from now. But to me, that's not in the cards at the moment because I identify this as not an uptrend, but a side trend. Okay. So therefore, support moves it to the up part of the trend. Resistance moves it to the down part of the trend. And until there's a break, I assume this will move sideways forever and ever and ever and ever. Okay. All right. Who wants my pivot points? Well, I mentioned this before. I'll give you my pivot points for free. I'll give you my chart templates for free. I will give you my profiles. If you don't know what a profile is in MT4, these are profiles. And I click on a profile, and each profile has charts, and each chart can have a different template. All right, watch, and I'll change the template again to something quite obviously different. Okay, so each chart can have a different template. A collection of charts is a profile, but then some of these templates have custom or unique indicators and EAs that are not included in your standard MT4. All of that I give you absolutely totally for free. And if you want to take training at FX Bootcamp, I also give you a wicked awesome coupon to save many, many, many hundreds of dollars on training that I have available to teach you how to use the pivot points, for example. That's available at charts.fxbootcamp.com. http://charts.fxbootcamp.com. It would also be appreciated if you visited Trader's Way and open up an account there as well. Okay. Taking a look at Brent. Okay, maybe you can use Brent as a leading indicator. Okay, and that'll be interesting because it's already essentially making a better lower low. So that might be a clue that we might be getting short on oil for a while. And that might be because the stock market's coming down. So hopefully interest rates go up, which means the dollar goes up, which means so stock market down, interest rates down. Anyways, lots of things are going to happen. Now, the repatriation, the target date on repatriation, of course, is April 1, but I don't believe the CFO of Honda and Mitsubishi and Toyota and Sony, I don't think they're going to wait until the last day of March to repatriate their flows, right? So this doesn't have to last all the way to April. It starts because of that, but it'll probably end sooner. So that's why you want to look for things like key pivot points on all these things. Not necessarily Brent, but you know, how long will the stock market fall? Till it's done falling. Oh, stock market opened, huh? Man, you guys should have reminded me. Okay, we have about an hour left. Okay. I have about an hour left. So I'm going to I'm going to take requests now from you guys. But I need...
I'm saying that his outlook for the U.S. economy is still 3%.
I need a quick break, though. So let's do this. I will be back in 1 minute. And I'll start taking requests. So put your questions here now. Back in a minute, huh?
I'm saying jobs data is all going to be revised up.
Okay, hour number 3, baby. Hour number 3. Cool. All right, on. Paras? Well, Michael already did that. Monthly outlook for almost all these is done. Oh, well, full yard? Well, yeah, you're typically, using a banker for that. Yeah.
I'm not saying he doesn't have any real news to add to the China trade talks, but saying that they are ongoing and progressing.
Gold? Yeah, I kind of did that one too, didn't I?
I'm not saying that he doesn't want to hang a timetable on the China trade talks.
Well,
I'm not saying that the talks are moving along nicely, and maybe they can have a meeting at the end of the month or in April and March.
Let me turn off Trade the News. Well, let me ask you, Crypt, did you sell high at resistance? And the other thing, too, let's talk about emerging markets, because EM was a good play in the beginning of the year. There are two things that make EM a good play. Does anybody know what they are? What are the two things? So you got a good technical trade. Okay. What are the two things fundamentally that make emerging markets a good play? Anybody? Emerging markets. What are the two things that should make that a good-looking opportunity? Cheap money, low interest rates. Well, I'll give you half, Ed. I will give you stable interest rates. In particular, dollar. Okay? Stable dollar interest rates. Stable United States interest rates. That's the particular one. Okay? Because their debt is priced in dollars, so if the interest rates keep going up, that's really bad for emerging markets because now their debt is more expensive in dollar terms. Okay? Or you could say, let's reverse it. How about what's bad for emerging markets is strong dollar. What's good for emerging markets is a weak dollar. Let's do it that way. So let's not even say interest rates. It's the value of the dollar. Okay. Then what's the second thing? And it's almost like what creates a weak dollar? If that's good for emerging markets, what creates a weak dollar? Give me something. Thank you, Jazzy. Investment into them, that's a consequence. Okay. And by the way, thank you for participating in the discussion because I think this is I could just tell you, but it doesn't make it interesting. And you probably learn better if you have to think first, right? So investing into an emerging market, yeah, that's consequent, but people are not going to take that kind of risk until they feel comfortable. Are you asking me in third person, Samuel? Positive global macroeconomics, yes, that leads to risk on, thank you, Marina, which then you will see, like in the United States stock market, would be going up, and to the point where it's gone up so much that you can't even get a decent fair market value, and everything's too expensive. So you're like, well, I'm going to take some of my money out, and I'm still really bullish, but it's too expensive in America. So I'm going to start looking for emerging market plays because they're cheap. So thank you. Those are the two things. I'll give you sort of risk on. Positive global macroeconomics gives you risk on. Rallying U.S. stock market gives you risk on. And more important, not just rallying stock market, but overpriced bullish stock market. Because now you're looking for alternatives, right? So there's a wealth effect, there's a substitution effect. So now you need to take some money out of the U.S. stock market, which is too expensive, take that money you just made, and instead put it in an emerging market that is now cheap. So you need sort of a wealth effect leading to a substitution effect to lead to the investment into emerging markets, okay? So let me ask you something now, and this goes back to whoever said they were just doing the emerging market play. I think it was Crypt. Are we expecting that in the month of March? Is that what we're expecting? Stock market rally, positive global macroeconomics, risk on, risk on, risk on attitude, go, go, go attitude. I've made so much money, I got to put it somewhere else attitude? Or is our hypotheses such that those are not necessarily true? What's your confidence level of just raw, pure risk on, risk on and low interest rates? If you are thinking that's not what we're facing in the next few weeks, then that USD Turkish lira short might be dangerous. You might technically have a good price, but fundamentally, it might be a perfect entry in a terrible trade, right? Beautiful tactics, lousy strategy. U.S. Army, sort of like signing up to go after bad guys and terrorists, and then you find yourself instead directing traffic in Baghdad next to an Humvee, and you're like, I'm a Marine. Why am I directing traffic? Don't need to be heckled, dude. I come in peace. Anyways, great question though, Crypt. Good luck. Be careful. Be careful. Next question. Welcome to Q&A with Wayne. Cigar time, huh? Cigar time. It's us just hanging. Couple of currency traders hanging out, talking shop. Ooh, okay. Well, that's interesting. So, by the way, are you Turkish, Crypt? You got like boots on the ground kind of stuff? You're like, I know Turkey. I have friends in Turkey. I have family in Turkey. I'm Turkish. I know Turkey. That's one thing. But Turkey's in a unique situation, really. Okay? Turkey is used to, or the Turkish people are used to very, very high interest rates. I think at one point the lowest interest rates in 20 years was like 10%. That was the lowest interest rates. And then the United States and Europe dropped their interest rates to basically zero. So lots and lots of Turks borrowed money for free. Great. So now they owe European banks euros, and they owe American banks dollars. Fine. Everything was good until interest rates started going up in the United States. And all of a sudden, Turkey ran into a big problem. They owe debt in dollars. So you actually need dollars, right? That's why we have a foreign exchange thing. But what happens if you don't have dollars? See, Turkey doesn't have as much exports as they probably should or need. They definitely don't have enough exports than they need. So when you export something, a product, Turkish coffee, right, goes from Turkey to wherever. And in exchange, they get foreign currency. Cool. So if you had a bunch of dollars, you just pay your dollar loan with dollars. What if you don't have dollar loans? Now, or dollars physically don't have dollars. All you have is lira because you do mostly local trade. Well, here you run into a problem pretty quick. You got this loan that you may or may not be able to afford anyways. But now the loan gets more expensive every month. And the Fed keeps raising interest rates, which makes the loan more expensive than it used to be. And then they raise interest rates again. The loan is more expensive. Then they raise interest rates again. The loan is even more expensive now. So we got this, like, the Fed monetary policy is making the loan, the actual loan payment, more expensive every month because you got liras, but you have to pay dollars. So that's one thing. That's sort of I don't know what you call it, a demand side, okay? But then here's another problem. Because it keeps going up and you don't have dollars, a Turk business owner or a real estate investor or whatever that has, commercial property like shopping malls and skyscrapers and all that kind of stuff, but he's financed it with free money from America or free money from Europe. Well, it ain't free anymore, right? So what happens is it goes up in the first month because of the change in interest rates. So now you have X amount number of lira, and you have to convert it to dollars. So now you have to buy dollars, which means you drive up the value of the dollar and you drive down the value of your Turkish lira. So a month goes by. If nothing else happened at the Fed, last week, you and all the other Turks that have this situation, you've been selling Turkish lira in the open foreign exchange market to pay off your loans. So by all these investors and business owners selling lira, lira has gone down, regardless of the Fed now. Just the selling of lira to acquire foreign exchange to pay off foreign debt. So now your Turkish lira is worth less. So now, if nothing else happens at the Fed, in month 2 to pay off your loans, you need even more lira to dump into the foreign exchange market to buy foreign currency to pay off foreign debt, which weakens your Turkish lira even further. And then you do it again a third month, and it weakens it further. So in terms of just the selling of Turkish liras, because Turkey didn't have enough foreign exchange, that process in of itself, of Turks entering the foreign exchange market, they're all selling lira. Not because they're freaking out. Well, they did freak out, but in the beginning it was just because they needed to sell lira to buy foreign currency to pay off foreign debt. But to add insult to injury, not only was the lira getting weaker and weaker and weaker and weaker, the Fed was raising interest rates more and more and more, which made the dollar more expensive as the lira is getting weaker. So now, if you needed 10% more, but now you needed 20% more, and it just was this relentless, horrific, painful, catastrophic cycle of events that was crushing Turkey. And then all the billionaire Turks are going, oh my God, I'm going to be broke again. So they take all their billions and they're getting it out of Turkey as fast as possible, weakening the lira even further. And holy crap. Then the Fed stopped raising interest rates. And it was a respite. It was like, oh my God, I can catch my breath now. And finally, because the third piece was here, Erdogan was like, there's no way I'm raising interest rates. You can go to hell, America, right? Like, oh my God. So that made it 10 times worse too. So finally, the Central Bank of Turkey jacks up interest rates at 20%. And the Fed stopped raising interest rates, and you get the stabilization. Okay? So now I have to ask myself if I'm going to be in lira over the next, let's say, 4 weeks even. Will we be in a situation where Turkish lira will appreciate? Well, not if the stock market's falling down, because then people are not going to invest right? People are not going to invest into Turkey. They're going to take their money out of Turkey. So if I'm a billionaire and I'm losing money in the stock market in the United States, I'm like, oh my God, I need to go to cash. So I'm going to cut all my losers. I'm going to leave my ones that I think are going to rebound. But over the month, let's say over the next month or two, I'm going to say, okay, I got to cut my losses. I got to reduce my exposure to risk. I got to get out of the things that are overpriced, and I got to book that profit in my pocket. I can always buy the next dip. I got to get out of anything in the stock market that I'm losing money on. So take some profit on some winners, take some losses. Maybe they wash out and offset each other and all that kind of stuff. Where else can I get money? Oh my God, I got all that money in Turkey. And they'd start taking that out. Why? They're not feeling good about things over the next few weeks. They invested in Turkey when money was free. It was raining out of the sky. Fish were jumping into the canoe. Not a problem. Oh, I got some money here. I got some money there. Oh, I get into Turkey too. Boom. Making money on Turkey, 20%. Click, click, click. Everything's good, right? So I don't feel like that's going to happen in the next couple of weeks, and probably not even this month, but maybe in May. Maybe in May. That May to June period, because remember, we got a Fed meeting in June, right? And there might be an interest rate hike in June. So that maybe up into non-farm payrolls in June, and then people are going to freak out. They're going to go, oh my God, the United States is still red hot on fire. We got signs of inflation. Now, of course, our NFP didn't tell us that today, but I'm thinking maybe in June, we're worried about the Fed hike in June. June 16th or June 15th, I think. And if at that point, the first or second week of June, we were really worried about the Fed raising interest rates, there's no way you want to be in emerging markets. No way. Because they're going to find out if the Fed raises interest rates June 15th, good morning, Istanbul. By the way, you're all a little bit broker. You see what I mean? You get it? Cool, right? So that's the business side. See, before Forex, I was actually a somewhat little bit of a famous businessman. Just in a little world of venture capital in the Silicon Valley. It's a very small world, but I'm a businessman. I came to Forex as a businessman, right? Right? So that I think about foreign exchange like a business person. I think about CFOs and I think about really what the foreign exchange market is. Okay? And that is business to business dealings. I'll give you an example. At the Internal Revenue Service, the tax man in America, there is no specific code on making or losing money in regards to foreign exchange on purpose. So what do you do if you're a foreign exchange trader, and you get audited, they're going to go up. They're like, they're going to make mistakes. The IRS is going to make mistakes. So businesses usually make or lose money in the foreign exchange by consequence of just having to deal with the foreign exchange. But, you know, Honda is just repatriating money. They're not making foreign exchange type dealings. And so they might lose money on that transaction on FX. They might make it, that kind of stuff. So it's interesting. I try to think of it as a non-trading way, but I think of it as logical, intelligent business decisions. But that's my background. Well, don't think of it that way. You're being too mechanical. Think of it as who's going to win from interest rates going up in the United States and who's going to lose. Okay? Imagine you're Ukrainian and you borrowed a bunch of money from the United States. What if you borrowed it from London? You're probably happy, right? Problem is, what's the interest rates in the Ukraine right now? 40%? Well, VIX doesn't measure risk on and risk off kind of thing. It measures volatility. So African Queen, the VIX has to do with how many options are being purchased against the S&P 500. Now, why do you purchase an option on the S&P 500? It's insurance. Okay? So imagine it this way. Think of it as demand for fire insurance. And you live in a forest. And there's a forest fire 5 miles from your house. Imagine all your neighbors calling, we'd like to buy some insurance now, right? If my house burns down, I want you to pay for it. Are you cool with that? They're like, yeah, well, sir, it's going to be $35 a month. I'll take it. I'll take the insurance, right? Demand goes up when fear is approaching, where you're like, oh my God, right? So imagine this month. How about this? You have the same idea as Wayne McDonell. And you're like, you know what? I've done my research. I think my stock portfolio is going to lose money in the month of March. What do? Do you sell your stock positions? Well, what if you built your portfolio since 2008, 2009, 2010? Really? You're going to dump your portfolio? Well, I said, okay, you're going to take some cash off the table with your winners, but you're going to reinvest that anyways. And maybe in the last 2 or 3 weeks, you took some trades. They're not really working out, and they're overpriced anyways, and you can sense that. So you're like, you know what, I'll just take that off the table. But the rest is truly a well-built portfolio. What are you going to do to protect that portfolio? Insure it. Buy some stock options. Use stock options so that if your stock portfolio loses money in the cash position, you earn money on the option. See what I mean? So if you lost $100,000 or $100 million on a stock market decline, but you hedged it with an option, now you made $100 million and you lost $100 million, and therefore nothing happened because you have insurance. Okay? So you hedged with options. And the demand and purchasing of the options against the S&P 500, which is the broad index, is reflected in the VIX, because that's what the VIX is calculated. Are people buying options on the S&P 500 or not buying options on the S&P 500? And just to give you an example, when you're standing in the S&P 500 pit, okay, it's sort of in the corner. So when you walk onto the floor, you got to go to the left, and you go to a bigger room. So you go to the bigger room, and on the left again, there's a big corner, and there's a big ring, buying and selling at the Chicago Board of Trade. And that's the S&P 500 trading pit. And that's where they're yelling and, right? Buy. Next to that, on the other side of that, squeezed like literally in the corner, you can't even see it, it's so small, is the S&P 500 future or options pit. So you got the big futures pit, which everyone's trading, and right next to it, there's a little pit, and that's the options pit, and that's just where you go to hedge. So you buy the cash, let's say. So you go over and you buy a whole bunch of S&P 500 futures. It's a futures market, but you pretend it's cash, right? And then you walk next door and you purchase an option that makes you money if the stock market falls. So now you're owning a position. So let's call it your portfolio. So you own a whole bunch of stocks and you want to hedge them all. You can then use S&P 500 futures if you wanted, or options, either way. But in this case, VIX has to do with options. So you can just like, oh, well, put an option on it, which means if the stock market falls in my portfolio cash position, well, then I'll make money on the option. Now, if my portfolio performs well as I expect it to, because that's why I bought it, if it goes up, well, I just lose money on the option. So it's like buying insurance. What happens if you pay your insurance premium this month, but you don't get sick, you're not in a car accident, your house doesn't burn down? Oh, well, you lose the premium, right? You paid for the insurance, but nothing happened. So you paid for the option, which is insurance, and nothing happened. So, let's say you paid, $100,000 for the option, but your stock portfolio went up, 10 million. You're like, oh, well, it's just insured. It was insured. It was just a cost of insurance. It reduced your risk. Okay. So when VIX rises, people are buying these options as insurance. Now, when you get into like July and August, VIX is going to be very low because nothing's happening. You're in the middle, you're in a desert, a volume and volatility desert. So you don't need fire insurance. You don't need flood insurance. You're like, dude, there's no trees. There's no water. There's no nothing. I'm just out here, Death Valley. As far as I can see, there's nothing. Okay. One day it will rain. One day you'll get a flash flood. You're going to need it, but not today. So that's what happens during the summer. So then what you do is in early August, you put $100 billion on the VIX, and you say, I think VIX is going up in the next 30 days. And people are like, are you crazy? It's 95 degrees and you're buying flood insurance and your house is in the middle of the desert. I look that far, and all I see is sand, and I look that way, and all I see is sand. Like, are you retarded or something? What's wrong with you? I say, oh yeah. One day when it rains, flash flood. Nothing's going to stop that water from coming. And it's coming. Not today. But it seems to me every winter it likes to rain. Well, hey. Every September, VIX goes up. Enough said. Cool, right? It was funny, like last summer, I gave the same speech to my trading group, and somebody asked me about VIX. I'm like, oh, yeah. So I went through and I explained it, right? Or planning. I think it was just planning. So I went through this whole speech. I'm like, hey, so we explained what VIX was. And I'm like, look, nothing's happening. It's, middle of summer or late summer. Nothing's happening. Nothing's happened for weeks and weeks and weeks. So it's reasonable to think nothing is going to happen for weeks and weeks and weeks, right? And people are like, well, that's not necessarily true. I'm like, well, why is VIX so low then? I'm like, well, everyone's on summer vacation. Right? Right? So I'm like, okay, well, when are they going to get back from summer vacation? And people are like, I don't know, the end of August, right before school starts for their children. And I'm like, oh. And what do you think they're going to do when they get back to the office, since their job is to trade? what is your assumption? You don't know what they're going to do. You don't know them personally. You haven't spoken to them and interviewed them. But what's a reasonable guess that when a trader gets back from vacation at the end of August so his kids could go back to school, what is he or she going to do when they get back to the office as a professional trader? Trade? Well, I wonder if that'll make volatility and volume go back up. I don't know. I can't predict the future. But it's plausible. And the funny thing is, the next freaking day, something happened and VIX went through the roof. It went up like the largest ever. It went up 20% in a day or something. Like 20%! It was just funny. It was like literally the next day. I'm like, oh, look, by the way, after my speech, VIX is up 20%. I think everybody in our group bought it. The speech was too good. Yeah. So anyways, I love trading. Have you guys figured that out? I love trading. Love trading. Love trading. Oh my gosh. Because, every one of us feels like we're unique, and yet everybody on a macro level is exactly the same. So once you get fundamentals put together and you understand central banking policy and you understand just macroeconomics and business cycles and trade. I studied trade at Harvard, loved it. Right? My minor at Harvard is economics, but my major is global studies, so it's macroeconomics is what I study at Harvard with a master's degree in finance, financial management specifically. Like, I love it. And you take all of this stuff, like international political economy, IPE, is a form of economics which is really interesting. I wouldn't want to graduate with it because I can't imagine it leads to any other job than working at an institution, the OECD or some think tank. I don't want to work at a think tank. But IPE is interesting because it mixes history, politics, and economics together. Oh, I became I fell in love with economic history. So I wrote a paper on how important the Black Plague was for the creation of European dominance in global economics. Because Europe went from nowhere. Europe was nowheresville. A bunch of kings here and there, and everyone, all these serfs worked for the king, and there was no economic development. No, there was no reason to do anything. And why would you need to? If you're a serf and you're like, hey man, I found a way to produce 20% more wheat if I just use better tools and better techniques. Well, why would you care? The king's going to come and take all your crap anyways. You're like, screw the king. I'm going to work as little as possible, right? So anyway, so when you start studying things, you're like, well, why during that period of time, how far back do you want to go? The 800s, before the Vikings or after the Vikings and stuff. But anyways, you can look at a period of time like, why didn't China take over the world? Why did Europe take over the world? Suddenly they're conquering America, Latin America, they're conquering Africa, later on India, right? What was going on there? China didn't get the Black Plague. Why didn't they get the Black Plague? They put up a freaking wall around the whole country. Very interesting stuff. So after the Black Plague, all the kings and queens went away. The serfdom, fiefdom, and all that kind of stuff, that all died. Because half the population died. Now you're a farmer and you have as much land as you want. You don't work for a king anymore. And you're like, you know what? I found out something interesting. If I produce more wheat, I can sell that and make more money. I need better tools and techniques. Boom, entrepreneurialism. And instead of answering to a king, you get like Genoa and Venice. They're like, we have city councils that do things, and we start voting on decisions. It's not ordained by God. We're business owners, and we will make decisions on behalf of our citizens. Ha ha ha! New version of democracy. And it was okay to be filthy and stinking rich. You didn't have to be ordained by God to be filthy, stinking rich. You guys ever watch Quest for the Holy Grail? The king walks by. That guy says, oh, he must be king. The other guy says, well, how do you know he's king? He says, well, he's the only one of us not covered in shit. Like, the king was rich, everyone else was poor, right? So anyways, capitalism changed all of that, right? So you had democracy kind of creeping into places like Genoa and Venice that were suddenly trading with Turkey and then eventually with China and all that kind of stuff. But that came from capitalism. And then the ships got better because they wanted to trade with more and more people because they were able to keep all the money themselves. They were capitalists. So now the ships were going farther and farther. They're going longer and longer, bringing back more and more riches. So things like insurance were invented and stuff, like, because now you can insure your ship going out to Turkey and later on China and all that kind of stuff. And very, very interesting. And since Spain took over the powers that Portugal used to have, Spain's conquering all of Latin America, even though the Portuguese got there first and got Brazil, and then all of a sudden the Spanish are totally taking over. What did the Portuguese do? They're like, oh, we'll go the other way. So you go to India, speak Portuguese. You go to China, they speak Portuguese, and like Macau. You're like, oh my God, the Portuguese were over there. Why were the Portuguese in China? Oh, well, Spain was doing that stuff. And it was, all interrelated stuff. It's just really cool, man. I love it, man. It's money. Money is awesome. The history of money, awesome. Awesome stuff. So once you understand sort of the cycles and stuff, and if you're studying 1,000-year economic cycles and stuff, it can get really interesting. Yeah. So I don't know. I've fallen in love with how that all works together. To me, it's more than gobbledygoo lines on a chart. There's a lot of it's very mechanical. Sell at M3, take profit M1. What's the big deal, right? But then how do you know, or how do you create a hypothesis for what's going to happen next week, next month, next quarter? And I'm constantly thinking about that. And I'd have to imagine my business experience, my education, but mostly my love for diving into the details gives me a clearer view of what might happen. And then, of course, I use technical analysis to prepare and take advantage of that. Crip says, I wish you took more, economic classes. Well, I'm doing one right now that's very interesting. It's actually a quantitative analysis of something methodology. Basically, a quant class, otherwise known as statistics, right? And we're doing things like standard deviations, mean regressions and stuff. I'm doing the math for that. I'm calculating Bollinger Bands by hand. Amazing, right? I'm doing mean reversions, mean regressions, right? I'm taking like the sum of squares to calculate the, variances from the means and like, very cool stuff. And I'm not a math guy. But when I interrelate it, like, oh my God, he's talking about Bollinger Bands, right? Very, very cool stuff if you're a currency trader. Doing the math. But I've always loved that. I've always wondered, like, why do these things work? Like, why do they work? What's in the math? What, right? Market making. I see it more in the stock market, and I'm not sure how much of it is still there. It's a little bit before my time, Forexer, and I didn't trade stock before Forex. I didn't trade futures before Forex. I've always been a Forex trader. So I imagine if I was a big, like a friend of mine, he does business in something like 30 or 40 countries. He does about $5 billion a year, okay, in 30 or 40 countries. Probably more now. But very often, they're in different currencies. And one day, we were talking, he's like, Wayne, sometimes I don't know what business I'm in. I think I'm in the foreign exchange business. And I'm like, yeah, you basically are, because he's constantly hedging all this. Well, anyways, what if you were dealing with rubles? Something like that. I think you can do that, right? Anyways, let's say some obscure currency that is not easily accessible. Okay, like you can pick up a pound anywhere, euro anywhere, all that kind of stuff. But let's say you're dealing with a country and the supply, remember supply and demand? The supply of the said currency is pretty low. But you might have a banker now. So he banked, I guess I shouldn't say, but he told me I knew more about foreign exchange than their giant bankers. Like their executive vice president knew less about the foreign exchange than I did. But anyways, so I won't say the bank, but imagine now that you're dealing with a giant bank. One of the things they can do for you as a service provider is give you the currency, because they try to stockpile these currencies, or go out and find it for you and provide it to you, because it's not an easy thing to acquire in the open market because the supply is low, but they will provide the supply to you. Now imagine that you want to buy an obscure stock, but no one wants to buy it. Or you want to sell a stock, but there's not enough volume. They might say, well, you're a good client. We will buy it from you and provide that market. And then they'll try to go out and sell it later or sell it to smaller people. And that's why you got to be careful where you get a phone call and you're like, hello? And they're like, hey, man, we wanted you to sell some Turkish lira or sell some ruble or whatever they're looking for. Or even worse, sell you what the guy is trying to do. So let's say you're holding a whole bunch of ruble, and you're like, I got to get out of this ruble, man. Call your banker, and your banker's like, okay, you're a good client. You do billions and billions and billions of dollars with us. All right, we'll take your ruble off your hands. Here's an exchange rate, and they give you a crappy exchange rate. So they rape you on that. So now you're out of your rubles, and now they have rubles, and they call up their clients. You're like, oh, dude, we got a big tip. You need rubles, man. You got to get in rubles now. All right? Yeah, how many rubles do you need? And then they hack you on that side. And then you're like, oh, my God, I bought all these rubles, and now the ruble's falling. And it's really funny. So they screw the seller and they screw the buyer. And they're like, hey, I'm a banker. I'm so rich. Whoop, whoop. Models and bottles. All right? But that's how it works. And it's been working like that for a million years. So that's how I think of market making. Now, you might be looking for a different answer. You might be looking for a different terminology of market maker. And in that case, I'm just going to say, I don't know. I don't have enough experience with that. But I know bankers. Oh, you went to BU? Yeah. Organic chemistry. Huh. No econ. Yeah. Yeah, I don't cross the river much when I'm there unless I'm heading downtown. Do you know Stanza de Cigari? In the north end? I head down there for cigars. Otherwise, I don't really cross the river that much. There, HBS maybe. Yeah, cool. So that, yeah, well, you tell me. I've been taking questions for the last hour. So if you ask me about a currency pair, I'll go over a currency pair. Cigari stands in the cigari. Great cigar place, by the way. You know what's weird though? People smoke marijuana there now. Oh, I'm not in Boston. No, when I'm in school. I'm in grad school right now. I got a huge bill for Harvard just yesterday because I spend the summers on campus. It's part of grad school, so I got to pay for room and board and classes. And I am not joking. So there's 10 people in my cohort. Out of all the people that go to summer school, thousands of people go to summer school. The 10 of us have the largest workload. Nobody works harder than the 10 of us in my cohort than anybody else at Harvard summer school. Amazing. The professor, sometimes, most of the time the professors know, but sometimes we get dumped in a regular class and the professors are like, what? You're like, yeah, we're taking multiple classes. And they're like, what? That's insane. Yeah. Oh, I know. By the way, I'm taking this one great class. What is it on? Leadership, I think. Is it the leadership one? Yeah, I think I'm doing one on leadership this summer. Turns out my professor, who is just coaching the 10 of us, right? So I spend 3 weeks with this one dude, the 10 of us. So it's very, very intimate, right? We're special. He is the executive director of the PhD program at Harvard Business School. Holy smokes. Like if I wanted to get a PhD from Harvard Business School, this is the dude. So I better not screw it up is all I'm saying. I got to impress this person. Because if this person says, hey, Wayne, you're really cool. Have you ever thought about a PhD at Harvard Business School? Yes. Like, dude, that's it. That's the guy. I have 3 weeks. It's like a 3-week job interview. Lock me in a room with someone for 3 weeks. Oh my gosh, I'm so like stoked. Like, oh my God, a PhD from Harvard Business School? Holy crap. And this is the dude that can go, Wayne, I like you. You're in. You should apply. I'll put you to the top of the list. Holy crap. Yeah, top of the line. And this guy was like a Marine or something. So you think he's going to have a tough leadership course with the 10 of us? Right? We're going to walk in. We're special. We're an elite cohort. He's going to be shaving our heads. You're nobodies. You're scum. Sir, yes, sir. Yeah. You don't know anything. I'm going to break you down and build you up. Harvard Business School style. Sir, yes, sir. So anyway, it's like, holy crap. I'm super excited about it. And that's frightening at the same time. Prepare for, we're basically going to be in a large range. Going back to Tatiana's question, we're going to be in a big range from like somewhere, I'd say maybe the 3rd week of April to the end of May, and then back down. And then whatever happens in the June meeting, I don't know. So then we got to kind of deal with that information. And then it'll probably fizzle out and we lose volume and volatility over the summer. So that's sort of, right, that's how I'm preparing for it sort of emotionally, if you will. Make sense? And that's us. That was 3 hours, guys. That was pretty cool. Thank you so much for participating today. Thank you very much. Even my computer just shut down. It's like, I ain't working anymore. Like, so I guess that's, my computer's like, that's it. So, yeah, cool. Right on. Thank you very much for spending 3 hours with me. Really appreciate you. Thank you for interacting. Amazing questions today. Thank you to FX Street for being a host for the 155 month in a row. So let me remind you of a few things. If you want my chart templates and or you want a large discount to FX Bootcamp training courses like the swing trading course, scalping, MT4, fundamentals, like you'll be managing the balance sheet of a corporate commercial bank. You know, if you want that kind of stuff, go to charts.fxbootcamp.com. Moderator, would you please post that again? Charts@fxbootcamp.com. Again, that gives you all my charts, my chart templates, my chart indicators, all the profiles, everything you saw today. It's yours for free. Along that way, after you download it, it gives you an offer for the courses, a big discount. Do that. And then also, please visit tradersway.com. Open up a trading account. Even a demo is fine. And on Monday at 7:30 in the morning, log into your back office, click on the thing that says live webinars, and I will see you Monday morning. And for that, I would say thank you for being a client to Traders Way. Cool, guys. Peace on earth. May the pips be with you. May your profits be above average, and have a wonderful, fantastic, amazing weekend. And don't forget to plan all your trades. Set them all up. And that reminds me, my swing trading group, we're going to meet Sunday, 5 p.m., market open. We're going to set up 250 pip trades. That's the swing trading group. So again, take care. Cheers.